Good morning, everyone. This is Anne Marie. Today is April the 22nd, and we're taking a look at SPY. I don't know if I put this on a tweet or I slapped it up as an image or I actually even did a video on it. I don't remember. Suffice to say, want to bring it to mind. This is a bullish formation. When you look at bullish formations that are harmonics, like these things are, what it means is everything's going to look like it's coming down, but really when it gets to the edge of the formation, it's going to pop up. And here's what happened just the other day. We came down into this level. The great thing about Motive Wave, using the automated tools there, it gives you a range of motion. It tells you if your candlesticks appear within the shading spaces, the actual overall formation of this particular harmonic is not broken. Only when you get outside of the ranges are you looking at broken. Now, with ideal symmetry, all of these shading pieces are actually going to converge properly, sort of like Whirlpools did on Friday, which is why I said, hey, listen, you need to take that thing on the open. And so, which was a great trade because the options went from like 10 cents to 60 cents for the 115s because nobody thought it was going there. Anyway, on with what we see going on in the SPY here. What we see is this pop off the event. I mentioned that, hey, listen, we could easily go into the VWAPs. We are there. As a matter of fact, probably, let's take a look at 156.10 is what it's printing today, so it's sitting right about here in the pre-market, flattening out a little bit. For those of us that like to play squeezes, SPY is setting up extremely nicely for a move at the open. Everything is in relatively positive trending territory, but it could easily roll to come back in to test the prior day's high. It's got quite a gap up. We expect maybe 50% of that gap to pull back unless there's something materially significant that's been reported. These pull-ups and spikes out usually do have a tendency to fill at least 50% of the morning gap, which is, we're going to see quite a sizable one actually. So that being said, what do we think about? Hey, listen, it's very likely that this is a particular region that we're going to clamor to and sort of stall for now. But ideally, where we're going to go is right back up here. Now, here's what we're looking at. This big motion right here is the last leg. If we are in rotation, meaning that this is the one leg that we're looking at, and we want a bounce event, we're going to look for 61.8 retracement, which puts it right about here, okay, at the 157.36. Now, I know this is probably driving bears insane because, hey, listen, it's dropping, blah, blah, blah. But I don't want to sound like a broken record. But I'm going to sound like one anyway. We're in a trading range. Something materially significant has got to happen before we pop out or break down. I don't know what it is. I really don't. I'm not good at that. I can't tell. There's some people that are great at that. Not me. I'm good at looking at the candlesticks and that's it. So all I'm seeing is the following. If I've got a rotation that gives me this way, and then I come up into this area, that's going to be an area that I see as a general chop zone. Could we break to the upside? Yes. What's my gut feeling? My gut feeling is that we have upside momentum before the breakdown. We're going to have a breakdown. No doubt about it. It's too early, in my mind, to see a breakdown. Now, as soon as it loses its level, trust me, I'm going to change my mind. And if you are of the mindset that a trader needs to make an estimation and they need to stick by it and it needs to follow through, then you're living in some utopia that I can't help you through. Because every trader who trades actively in the market must completely assess everything that's happening in the market every day to make sure that they are still focused and on track with what it is that they think. Because the market's going to tell us what it's going to do just before it does it. And if our eyes aren't open enough, we're not going to see it. So, although I have a general supposition about what's going on, the second it breaks levels that I believe are important support or resistance, I am out of Dodge. I'm totally changing what it is that I'm thinking. I am reassessing and I am putting it in a different time space so that I can make the right trade. I don't care about being right. I care about making the right trade. And that means changing my mind if my original assessment is proving out as incorrect in the market. All right? Every good trader does that. So if you want to say, hey, listen, somebody's flip-flopping around, knock yourself out, but you're being unrealistic. Why am I saying that right now? You know, once in a while I sit around, I don't think anybody's ever said that about me. But what I'm saying is, I see that written all over the place. You said that this was da-da-da, now you're changing your mind. Nothing's wrong with that. So give these traders that stick their necks out every day and say, hey, listen, it's my estimation that the market's going to do this. And if they change their mind, they're allowed to do that. All right? Don't give people a hard time because they're reassessing the candlesticks. Okay? So, that being said, don't even ask me why I went into that diatribe defending my colleagues, I suppose. Just pay attention to the levels, folks. It's breaking out above here. Expect to retrace. What could we have? See the two VWAPs here? Noisy. It could chop around and be super noisy. We've got a gap event here. That's really where we're sitting at right now. Okay, the top edges of what we've printed pre-market are somewhere around here. So we've got this big gap and a resistance level 2 sitting in this region. I suspect it's going to be a very messy morning. All right, good luck trading.